What's up, everybody? Welcome to Swan Signal Live. I'm your host, Sam Callahan. I'm the lead analyst at Swan Bitcoin. We have two special guests, some dear friends of mine that are joining the show today to talk all things macro. But before we get into it, I want to bring up Pacific Bitcoin. That's the conference that Swan puts on every year. It's more of a festival. It's a great time in Santa Monica next October. Right now is your time to grab some tickets. Go to the website at pacificbitcoin.com. We're going to have some great speakers lined up. It's going to be awesome satellite events, workshops. So go check it out, pacificbitcoin.com. So macro has been all the talk this year for good reason. We've had bank failures. We've had almost the debt ceiling explode and the government default. We've had asset prices rip, including Bitcoin is one of the best performing assets on both a risk-adjusted and non-risk-adjusted return profile. And a lot of people are wondering, is this going to continue? Is this the start of the new bull market? And I can't think of two better guests to bring on the show than Dr. Jeff Ross, who's returning once again. And then we have John Haar, who's the managing director at Swan Private. It's great to have you guys on. We talk all the time, but this is going to be a great conversation.
Thanks for having us, Sam. Really appreciate the invite.
Yeah, good to be on, Sam.
Yeah, John, of course. We're going to have you on more often, my friend. But I saw a headline. It was actually Joe Wiesenthal over at Odd Lots Bloomberg. He's been a Bitcoin critic, I would say, but he's always been kind of neutral and he kind of is open to some ideas. And he had a blog post that I saw today that he talked about how Bitcoin is at $44,000. It's up almost 16% in the last 7 days. But Bitcoin interest measured by Google Trends is still very suppressed. It's almost at the bear market levels. And so what do you make of that dichotomy between the price and interest? Throw it to you, Dr. Jeff.
Sure. So, well, first of all, I say the obvious take home from that is that the bull market hasn't even started yet, right? We're nowhere near euphoric levels. Like, it's been a fun ride for those of us who have been holding for a long time, and we had to endure the bear market and then the crab market. Now I say we're in the bull crab market. So you can call me Dr. Bull Crab if you want. So yeah, interest is barely even there so far. People are still waiting for this big recession to happen. I'm sure we'll plug into that if that's going to happen or not in 2024. And but so a couple things I'd like to think. First of all, what's the interest? General interest is still very low, basically non-existent. Two, what we can learn from past cycles from looking at on-chain activity is that OGs, they always sell into a Bitcoin bull market and they usually accumulate during bear markets. Traders, short-term traders, they do the exact opposite. They buy into a bull market and they sell into a bear market. And so we're just not seeing any of that traditional bull market activity right now. The OGs, the people who hold Bitcoin for the long term, they've been in the space for a long time. They're not newbies. They haven't even considered selling yet. They're just chilling. They're still stacking. They're on Swan, buying their daily or weekly or monthly purchase, and they're not selling anytime soon. I think they're waiting for probably 6-digit Bitcoin, which I anticipate by probably the end of this year. The end of 2024, not the end of this year, if not sooner. And so that's what I say. The bull market has yet to begin.
Yeah, and I'm just reading Joe Wiesenthal's tweets here, catching up on it. I think that is the obvious takeaway that Dr. Jeff said, bull market has just begun. Maybe I can give some of my firsthand experience being part of the Swan Private team over here. We're definitely seeing new interest, like no doubt that's happening, but it's still early in that cycle as well. I would say we're seeing more people who have already been well aware of Bitcoin. They've been following it for years or at least months at this point. And they've developed some level of conviction. I think they're on top of this. They know what's going on. They know all the factors that are likely to support Bitcoin's price in the coming months and years. So I think they're on top of this. They're buying. But we're not getting like the brand new people in that Bitcoin's price is rallying so much that it's being covered in financial media, that it's on their radar. And another this is a very informal indicator, but I think people like ourselves who are known as the person in their circles who knows something about Bitcoin, I'm personally not getting those messages yet of like, hey, tell me about this Bitcoin thing again, which definitely did happen in 2021. I think it's early phases of this bull market. we still have a lot more to go here.
I actually did get one of those text messages, John. They were just like Bitcoin eyeballs. And I didn't even say anything. I just sent them the welcome to Bitcoin course. That's what the beauty of that course is, because I'll just send them that and I don't have to write like a book of a text message. So I was like, just go check it out. You know me. I've been talking about this for years. Just go listen to that course and let me know what you think. But another thing that I saw today was Jamie Dimon. Apparently, there's a committee hearing right now, and they're just bashing Bitcoin and crypto with Elizabeth Warren. They said if there's one thing that Jamie Dimon and Elizabeth Warren can agree upon, it's their hatred for Bitcoin. And so I wanted to ask you guys, if you could be at that hearing right now, turn on that microphone, what would you say to Jamie Dimon and Elizabeth Warren?
I'll take that one because this is my favorite rebuttal to all of them. I would say those are great points, and I'd say those are great points. But now, can you do the U.S. dollar, Jamie? Because you're saying what's crypto? First of all, whenever somebody interchanges crypto and Bitcoin, it means they don't understand what they're talking about, right? They don't understand that Bitcoin is completely different and has nothing relevant to do with proof of stake crypto. That's number one. So you can just immediately ignore everything they're saying when people like that talk about it, because they just don't know what they're talking about. Two, when they do talk about, and I heard, and in fact, I was going to tweet this out, but I didn't have time before this post here. But he talks about money laundering. He talks about terrorist financing. He talks about all these horrible things that crypto, and what he means is crypto and Bitcoin for, even though he doesn't know what he's talking about. And I would say, okay, now do that exact same exercise for the U.S. dollar. How much of the dollar is used for money laundering and terrorist financing and all of these things that you say are so bad about this? Let's shine the light back on yourself for a little bit. And so Bitcoin gets a hard time for most of the stuff. Most of the stuff that people make fun of Bitcoin for or try to deride it for are basically the exact same things that they are doing with the US dollar, with their fraudulent activities, with their money laundering, all that kind of stuff. And so I just think it's just completely hypocritical. It's basically all of government marketing is take the light off of us. We're gonna take all of the evil stuff and bad stuff that we do, and we're gonna pretend that you do it, and we're gonna shine the public's attention onto you so that it takes the focus off of us. I think that's what all of this stuff is about. It's just nonsense.
Mm-hmm.
Yeah, I would say if they go the route of this is money for criminals, it's terrorist financing, it's money laundering, I think just like Dr. Jeff said, it's very easy to turn the spotlight back on them and say, can we just have an honest comparison about what's going on in the legacy system? You guys are not doing a good job of stopping money laundering, stopping terrorist financing whatsoever. If anything, you're making honest people put in all their information to a big honeypot that gets hacked, and you don't actually end up stopping much of that activity that you're attempting to stop. Other ways that I've seen them try to knock Bitcoin, and again, it's hard to even pick apart their arguments because, like Dr. Jeff said, if they're just lumping everything into Bitcoin and crypto, sometimes they might actually say something that we believe is true, but it only applies to crypto. So if they go the route of saying, oh, this is like a consumer protection thing. Look at all these platforms that blew up in the past few years, and crypto is so dangerous and they don't have the right guardrails in place. I mean, I could agree with that to a certain extent, but again, it's all about separating Bitcoin versus crypto. It would be like them saying, no one should invest in tech stocks because a bunch of people lost money in pets.com. That's just an absurd statement. You have to separate out different investments that are completely different from one another. And at the end of the day, if we just distill the reasons that we're all very passionate about Bitcoin, what does it protect people from? Debasement and censorship. So if you're really up on the hill at one of these hearings talking about how evil Bitcoin is, you have to answer the question as to why would you want to stop people from having an asset that protects them from debasement and censorship. And of course, you'll never get a clear answer from a banking CEO who just wants to protect his moat, or a sitting US senator who I believe wants to protect her moat, which is oversight, mass surveillance into what Americans are doing, and then potentially, be in bed with the banking industry so that she can have oversight into what the banking industry is doing. I think that's what their true motives are.
Yeah, I mean, it's like the quote, it's tough to understand something when your paycheck depends on not understanding it. Paraphrase that. But also Bitcoin protects against seizure as well as censorship and debasement. And so it doesn't have that counterparty risk. When people buy Bitcoin, it seems they're basically taking those dollars out of the system. And Jamie Dimon really benefits from that dollar system. And as Dr. Jeff mentioned, once people go into Bitcoin, they seem to hold on to it pretty hard. About 70% of the supply has been held for a year or longer at this point. That's an all-time high. So these holders are holding on to their sats. Now, my question is, do you guys think that changes at a certain price level? Because one way to look at that is that, yes, people are really bullish. They expect price appreciation, so they're holding on for higher prices. Another way to think about it is maybe people bought near the all-time high. They're deeply underwater. And once prices get up to that all-time high levels, you're going to see more churn as they kind of get out of their positions after being underwater for a couple of years. Maybe they're not like believers yet, but they're like, I'm not going to sell at a loss. Do you expect that number to decline as we approach the previous all-time high around 69,000, 65,000, so to speak?
I'll start with that one because this is something I've pondered a lot, especially being in a client-facing role where I talk to clients every week, and some of them share with me how their own plan for what they expect to do in the future, what they expect for Bitcoin price cycles. And if you just look historically, you guys can tell me if you agree with this or not, but I would say generally speaking, not that many people take profits or even attempt to take profits towards the top of a Bitcoin bull cycle. Yeah, there's some people that do it and they probably make a big noise about it on Twitter because they were successful. But generally speaking, things are so euphoric at the top of these cycles that a lot of people are getting in for the first time. The people who already got in, it just seems like it's going to keep going forever. So part of me thinks that will continue because it's just so much easier said than done. There's no sign that appears in the sky that tells all of us, hey guys, this is the top of the cycle. And then the fact that you have new people coming in, I have a hard time seeing that a lot of people are going to attempt to sell once they get above water, because there's always new narratives as well. And I would love to get into this in the conversation. I kind of have a list of like 8 to 10 things that are just super positive factors that are going to support Bitcoin's price in the coming months and years. And I think people become aware of those. There must be some reason why they're investing and allocating funds to Bitcoin. And as they're doing that, those narratives, I think, get better communicated throughout the Bitcoin ecosystem. So they have some belief that they're investing in this for a reason. I just don't think as many people go into it with the trader mindset of I'm going to take profits here. I think the average person goes into it with a longer term mindset. I'm painting with broad strokes here. Obviously, there's some people with a trader mindset, but in general, I think most people come in with a long-term mindset and they're not looking to, sell at a certain point in time.
Dr. Jeff, how about you?
Yeah, I guess it goes back. Like I hear the points John's making. I think going back to what I said before, when you look on chain, you can see that OGs do tend to sell into the bull market once it gets going. So my take on it is that basically once we hit a new all-time high, we'll start to see OGs trickle into becoming sellers and add their Bitcoin to the marginable supply. I think that increases over 100K. Who are the kind of people that are doing this? These are people who got into Bitcoin back in 2011 through say 2015 or so. Their cost basis may be a couple $100 or less. And they're like, you know what? I could sell, a tiny fraction of my stack right now, maybe 1 or 2%, and I could pay off my mortgage, or I could buy that, second home I've been thinking about, or whatever. I think that's what we see in those kind of things. But I think the people, to John's point, who are sort of newer, maybe in the last 5 years or so, they probably aren't going to be selling. Obviously, the traders will, but the people who plan on holding for the long haul, the dollar cost averaging clients, they're probably going to hold through this entire cycle, and they're going to ride it up, and they're they're going to ride it down, and they're going to, probably wish they had sold some at the top, but then they're going to ride it through, and they're going to become true hardened Bitcoiners, and they'll be the OG of the next cycle. So that's my take on it. I think that the supply will actually, so we've seen that falling supply on the margin, which is fantastic, and I think it portends to pretty nice supply demand dynamics going forward for this cycle. And if demand increases, as we probably all expect, fairly aggressively, that only can mean that the price will respond aggressively and probably to the upside. So I'm looking forward to what's coming in the next couple of years.
The crab has turned bullish.
Bull crab.
The bull crab. Well, this past month has been interesting because it's been basically an everything rally. I mean, bonds have rallied, stocks have rallied, gold hit a new all-time high. Bitcoin obviously is ripping. Do you guys think that it's all related around interest rate expectations now that, the Fed has had messaging that they're going to, maybe stop cutting rates, or at least put an extended pause where they are? They're not going to keep cutting or raising rates. At least that's the messaging they're giving us. And do you think the market's just responding that the whole month of November with all these asset classes rallying basically together?
I'll give my 2 cents on it, and then I'm sure Dr. Jeff, part of his answer is going to be how he looks at liquidity. I always love when Dr. Jeff talks about liquidity on Cafe Bitcoin. But I think what you said, Sam, is certainly a factor. This Fed pause rally seems like it's the end of a hiking cycle. Kind of makes sense that financial assets would perform well on the back of that. I think there's one other factor, that is people have been talking about recession coming for quite a long time now. And it just hasn't happened in the way that people have forecasted it. Maybe there's been slowdowns, there's been layoffs. We did have 2 quarters of negative real GDP growth, even according to the official numbers. But it just hasn't been the big recession that many people have called for. And I think that because so many people were calling for a big recession to happen, a lot of investors, capital allocators out there were positioning their portfolios in anticipation of something bad to happen economically. And I think that means, keeping cash on the sidelines and more conservative investments. And that's also helped by the fact that they could get 5% in a money market fund. And now I think you might be starting to see a reversal of some of that. I don't want to call it a total capitulation yet, but I think you might be starting to see a reallocation of some of those people who were positioned very conservatively. And they're saying, okay, maybe this recession narrative is I'm not believing it as much anymore. They just watched stocks, do really well so far this year in 2023. Last I checked, QQQ is up like 40-something%. The S&P's up low 20s%. And some of this might be them chasing returns, right? I'm not saying that just because they're reallocating into these things means it's the right thing to do, but they might be looking at it saying, I was just positioned conservatively for the last 6 to 9 months. It didn't really pay off. I'm not seeing this recession. I'm going to shift and go into a little bit further out the risk curve. So I think that plus the Fed pause could be reasons for why we're seeing markets do what they're doing.
Yeah, I think those are great points. And so kind of to piggyback on that, a couple observations from past recessions were basically, once you see the treasury market, the long-term, the 10-year yields are the best thing to look at, I think. Once you see those peak and then roll over, you get this little period where it's really interesting, where people are buying bonds, so that's pushing treasury yields lower, and they're buying stocks. You get a bit of a blow-off top in equities, especially in NASDAQ type stocks. So it's very possible that this is happening. In fact, I think the peak happened in 10-year yields around mid-October. I want to say like around the 19th or so of October. If it's based on the 2000 and the 2008 cycles, what happened after the 10-year yield peaked is it took somewhere between 2 to 4 months, if you kind of blend those two time periods together, where stocks ripped higher before then they plummeted after that. So it's very possible we're having a bit of a blow off top right here. The other thing to consider is that it's also possible that we're not going to have the recession that everybody thinks we're going to have. It's possible, and I'm increasingly leaning into this camp, that we're actually going to have the soft landing that everybody kind of, everybody who's smart kind of smirks and giggles a little bit and says, you're so naive. You think it's possible to have a soft landing. Look at all these times where people thought it was going to be a soft landing and it wasn't. I actually think it's possible this time around. And I think it's possible we don't get a recession. I was, as you guys probably know, and maybe you were in the same camp as me, I was fully expecting a recession in 2022 and into the early parts of 2023. And it took me about a year to be like, okay, something funny is happening. Like, why are we not getting this catastrophic recession that it looks like everything is setting up for? I would argue that we were on our way to having the catastrophic recession in March of 2023 when the banks were starting to fail. And then the Fed stepped in and did the bank term funding program, and they did their kind of special maneuvers. It also happened a little bit before that with the gilt crisis in, I think it was September of 2022. Special things were done then that basically broke the dollar and broke the treasury yields. And then the Fed liquidity spike happened in March of 2023. I think those things are the reason why we haven't gone into a major recession. So I think they handle that. If you're into that sort of thing, they probably handled it well by pushing it down the road, and pushing it down the road far enough. I think it's possible that we will, we've been in a manufacturing contraction for over a year now in the US, but the services sector continues to be expansionary. So in the services sector, the US is basically a 70% to 30% or so services to manufacturing type economy. It's the services sector that continues to keep us out of a recession. And I just think that continues. I don't really see that changing anytime in the near future. And it looks to me, when you look at kind of the indicators and PMIs and those sort of things, I think we're at or close to a bottom in the manufacturing contraction. And if that spikes back up and turns expansionary again while services are still expansionary, we're not going to have a major recession. And I think we might see unemployment pop up into the low 4%, and people will be calling for, because that's a greater than 0.5% increase from the lows. I still don't think that means we're in a serious recession. I think my base case for 2024 is just kind of a low growth environment, low GDP. Inflation won't be spiraling out of control. And so that coming full circle makes me kind of bullish for risk assets as we head into 2024 as well. I don't see the government stopping their fiscal spending anytime soon. I think they're going to be doing a ton of new treasury issuance, and we'll see how that goes. But I think there's actually a market for that now, and we can get all that kind of stuff. So long story short, that's why I'm bull crabbish. I'm sort of sideways to up in general. And I'm not seeing massive, like lighted up kind of growth, but I definitely think we still have low grade growth and we don't head into a major recession.
Yeah, I agree with a lot of that, or maybe all of that. And I think I don't want to play semantics, but I think it's up for debate as to is that a soft landing or is that just a delayed hard landing? I could argue it either way, because I agree with what you said, Dr. Jeff. It's you kind of alluded to this. They didn't really solve these problems. They just kind of kicked the can much further down the road than people have thought. And I've kind of been putting together a list here of why this might be the slowest walk into recession potentially in history. Because most people would look at this and say, look, we just had very low interest rates and they've been raised. We all saw the stats at the fastest pace I think in US history. This has to lead to a recession. That's what people have been saying for many, many months now. But you look at what else happened during the last few years, and let's take a look at what preceded those rate hikes. In 2020 and 2021, corporations, both investment grade and high yield, issued record levels of debt and at record low coupons. So they got themselves funded for quite some time. Those corporate debt maturities don't really begin in a significant way until 2025, 2026. So can kick down the road for the corporate sector. The housing market, everyone remembers, was on fire in 2020, 2021. So many people locked in 30-year mortgages at a very low rate. Those people are not really affected by the increase in interest rates. And I should have said that for the corporate sector. The increase in interest rates doesn't really affect a company that just issued what they normally would have issued over the course of 5 years. They issued it all in 2020 and 2021. They're okay that corporate yields are rising because they don't need to issue as much in the coming years. Same thing for someone who locked in a 30-year mortgage in 2021. Mortgage rates go up. It doesn't affect them as much. Massive government deficit spending. We all know what happened in 2020, 2021, whether it was stimulus checks directly to individuals, whether it was PPP lending. Another thing kind of in this category, which I just became aware of recently from an astute Cafe Bitcoin listener, actually, he let me know that small businesses were given hundreds of billions of dollars in emergency funding from the government. This is from the SBA, the Small Business Association, something called the Economic Injury Disaster Loan Program. So these terms, I mean, get a load of this: 30 years, fixed 3.75% rate, and there were no payments due on them for the first 2 years. So, I mean, talk about another can that's kicked down the road. And at first, I was incorrect on this. I thought it was only the large corporations who were benefiting from those easy times in 2020, 2021, easy monetary conditions, I should say. But small businesses through this program also got to kick the can down the road. So again, another thing that's going to lead to a slow walk into a recession. And then you have to look at what happened during the rate hikes. And Dr. Jeff alluded to this. We get a new Fed acronym made up program on a Sunday, BTFP, Bank Term Funding Program, that effectively insulates the banks from the effects of the rate hikes. Because you remember what that program is. The banks have treasuries that are underwater. That's causing a problem for them from an asset liability perspective. It's literally leading to bank runs. Those banks, instead of having to sell the treasuries and basically have what did happen to the gilt market before the Bank of England stepped in, they get to pledge those treasuries. Treasury could be at 70, 80 cents on the dollar. They get to pledge it at par and get a loan at par. So basically it's like, hey, you banks, you get to pretend like the rate hikes never happened. And then the last point, which Dr. Jeff also hit on, is we're deficit spending at somewhere between 6, 7, 8% of GDP right now. That's typically, you don't see that level unless you're already in a recession. So we have this weird dynamic where the US federal government is deficit spending like preemptively before we even go into the recession. So I know I just went into a ton of stuff there, but I think for those many reasons, that's why this recession that people have been calling for is just not coming. And then one final point I'll throw out there is not to get too philosophical, but I think you two guys know that I often harp on this point that there's no such thing as prices, like in a singular measure of CPI. And people attempt to do it. That doesn't really exist. There's no such thing as the cost of living. There's also no such thing as the economy. And Lynn Alden has done a great job of this, saying that it's a tale of two economies. There are some people who are definitely being hurt by higher interest rates, no doubt. I'm not trying to minimize the effect of that, but it's just been a tale of two economies. If you're Microsoft, you issued a ton of debt at low coupons, you generate a ton of free cash flow, you put that cash flow at 5%, you're actually earning net income. That's completely different than a 23-year-old who just graduated college, didn't have the money to buy a house in 2021. House prices went up however much they did. Now mortgages are 7%, and he or she is priced out of owning a home. Completely, different thing. So I think it's important to remember that it's simplistic to talk about how is the economy doing, but it's obviously much more complicated than that under the hood.
I mean, that was a great summary of all the ways that the economy is kind of staying afloat. I would say that, and some people have argued this, like Paulo Macro is a Twitter account, and he's talked about this a long time, is how the U.S. is becoming like an emerging market. So it's not really a soft landing, it's an emerging market landing. So you're going to have excessive deficit spending, rising bond yields, currency debasement, elevated inflation, hot nominal growth, but low real growth, highly politicized monetary and fiscal policy making, and weakening rule of law. And so I think that's kind of what we expect going forward. It keeps everything afloat, but it has long-term consequences. And John, you had a great summary of the Bank Term Funding Program. That's set to expire, I think, in March or April. I just saw a updated chart of the unrealized losses on these banks' balance sheets. They're still there. And that's set to expire in a year. Do you think they just extend that? Or what happens if they actually let it expire? Do you think we'll have another banking crisis similar to March? Because the problem hasn't been fixed. Like, these banks are still sitting on massive bond positions that are underwater. They just kind of been papered over with this new program. So what happens when it expires next spring?
Yeah, there's nothing more permanent than a temporary government program, Milton Friedman. That would be my gut instinct, is that this cannot expire. This becomes a permanent program. If I try to play the other side of it, it's possible that it actually could expire. But the reason is because they threw another piece of duct tape somewhere else in the system. And let me explain that. So one of the other things that happened during March of 2023 in what I think now we can call a US banking crisis was that FDIC insurance was effectively unlimited. If FDIC insurance was applied the way before that thought it applied, it would have been a $250,000 cap. That's not what happened in First Republic, for example. Depositors were bailed out. I think it's fair to say that was a depositor bailout. It was different than the GFC, the Great Financial Crisis, because back then the banks were bailed out, meaning the debt holders and the equity holders in the banks were bailed out in most cases, not in all cases. And the depositors were bailed out as a result of that. In the 2023 banking crisis, the depositors were effectively bailed out, but the stockholders and the bondholders were not. So I think you have to ask yourself this question: with this effective unlimited FDIC insurance now, because they're just not going to let a bank fail and tell people, oh, you had, a small business with a few $1 million in this bank and it failed. Like, sorry, FDIC insurance is $250. Here's your $250. You lost everything else. They showed that they're not willing to do that. And because they effectively uncapped it, does that make the average person say, okay, I'm no longer scared to pull money out of my bank? Because you have to remember that the real trigger for a bank to potentially experience a bank run and collapse is people pulling their funds out of the bank. So if you effectively uncapped FDIC insurance, does that mean enough people will say, okay, good enough for me, I don't care if my bank, has a bad loan book or whatever it is? Maybe. But again, my gut would be that they're going to have to keep BTFP going.
Doc?
Yeah, I just agree with everything John said. There's no way they're going to let the program stop. And if they do, they're just going to find some little secret backdoor way to keep it going. And then the other, just to John's point, a lot of people think America is a free market economy. Like, we're just absolutely not a free market economy. We are a centrally planned and centrally controlled economy. Why? The main detriment of that, I think, is that we don't get the creative destruction that is necessary for a healthy economy. And so the Fed just absolutely will not let destruction come to the banking sector. So, we had it happening. All the fireworks were starting. We were seeing stuff roll over, and then they come in like Superman and do this bank term funding program and do these other options to increase liquidity and to save the banks. Because of that, you don't get the creative destruction, and all that does is it kills future growth. So we're pulling forward future growth, future earnings, future profits, those kind of things, and we're taking them today to preserve the crappy companies that basically should go down. When you have that in an economy, you just can't grow, and we just have that going over and over and over again, and it's only getting worse year after year. I personally think that the Fed and central banks in general, but predominantly the Federal Reserve, they wrested control. They took control of the markets back during the global financial crisis in 2008, 2009, when they just flooded the market and lowered interest rates and then continued it for about 15 years. I just don't think the markets will ever be the same unless we have just a massive reboot again, like, maybe a major world war or something, and then everybody's debts get canceled and we start over again. If that doesn't happen, it's just centrally planned until further notice. So that's another reason why there's a big difference between the economy, per John's point. There isn't just an economy. There's multiple different economies and multiple different markets. I think the markets have been detached from the underlying economy for the past 15 years, and it's only increasing, and it's really based on what liquidity. That's why I follow liquidity metrics so much, because to me, the only thing that really matters is how much liquidity is in the system. And the more liquidity there is, it's like more oxygen in the system, the more people are willing to move out on the risk curve. And that's when we see things like the NASDAQ stocks and Bitcoin and crypto nonsense perform really well, is when liquidity is abundant and when it's getting withdrawn, which it did throughout 2022. That's when we see a reversal of all those things. So it's fun to talk about the economy, but some things matter more for risk assets and even Bitcoin than what the underlying economy is doing.
Yeah, I mean, Sorry, Johnny, you want to go?
Just one real quick point. I think that is what Dr. Jeff highlighted there is huge and probably doesn't get enough airtime, but it's a difficult one to talk about. This idea that the government's just like gradually getting more involved in the economy as time goes on, becoming more command and control, even if not full command and control, just more involvement, whether it's from the creative destruction not happening. So you have some big allegedly private company, but again, they wouldn't be in existence if it weren't for all these different government programs and manipulated interest rates. And then you also have the fact that spending keeps going up. I know I've seen a chart at some point in the last year that showed percentage of people's income in the US that comes from some sort of government transfer payment. And it's just a line that keeps going up and up and up over time. And one thing that you can get from this excessive government involvement in the economy is you can make economic statistics look like they're doing okay. Like if the government's going to spend 8% deficit spend, 8% of GDP every year and do even more, yeah, like you're going to get more GDP. I hesitate to even call it GDP growth because it's not like the real growth that we would think of private companies producing real goods and services that people want. You can kind of puff up the economic statistics for a long time under this approach. But again, it's hard to talk about because we're really talking about like a counterfactual here. The three of us would make the argument that if the government got out of the way and you let real creative destruction happen, the economy would grow much better. But you're making this counterfactual argument, and it becomes difficult because you can't just point to something tangible and say, hey, this is exactly what would happen if you got out of the way. So it becomes a little bit more theoretical, and it's harder to get through to people.
Yeah. I think we do know what happens when the government gets too involved, though. I mean, I'm just reminded of emerging market economies again. I think of Argentina. And I heard an interesting stat from Stanley Druckenmiller that during the pandemic, the Fed financed 60% of the bonds that were issued by the Treasury during that time period. And Argentina did the same thing. And if we look at Argentina right now, they have that new president, and just in general with like nation state adoption of Bitcoin, I was curious to hear your guys' thoughts because Samson Mao, he works at Jan 3. He's always talking to politicians, trying to advocate for Bitcoin adoption at the nation state level. He had a tweet yesterday. He's teasing. He's like, we got a big announcement, coming up at the end of the year. What are the odds, do you think, of a nation state going the route of El Salvador? We've seen them have positive results since they've adopted Bitcoin. I mean, their growth is up. They're paying down their debt. They have one of the best bond performance since they've done it. I mean, Goldman Sachs actually put out a report and said, like, yeah, we missed this one. So Samson's saying that maybe something's coming down the pipeline. You have excitement over Argentina. What do you guys think around nation state adoption in Bitcoin?
I mean, I'll just say I'm cautiously optimistic about it. I don't want to get overly optimistic. I try to not get too excited until I actually see the hard data. So we'll see what happens. But it's hard to ignore what's happening in El Salvador, to your point, Sam. I mean, it's been an awesome case study. Everybody was mocking it, of course, during the bear market. And now they're like, oh, whoa, maybe there's something to this. You just can't help, because Bitcoin is an honest ledger, an honest unit of account. You can't help but to have just a fantastic ledger when it's Bitcoin based. It helps, corporations, it helps individuals, and it helps nation states as well. So it's been a really great case study to watch. I think it bodes well. I think Central and South America are going to be, because El Salvador was the first and with Bukele, and having Max Kaiser and Stacey Herbert as advisors, and Saifedean, I think, is an advisor as well to Bukele. That helps, right? It keeps the crypto nonsense out of it, and it helps them to stay serious and stay focused. They're seeing what can happen firsthand, and I think the other nations around them are taking note for sure. And we talked a little bit about what's going on in the Middle East. I think Middle Eastern nations are taking note of it, and lots of Central and South American countries. I would not be surprised if Samson's announcement was Argentina for sure. Malay is the kind of guy who would say that and try hard to push it through. I think it would be awesome. I would love to see Argentina get back to its glory days, right? It used to be an amazing country with freedom and with incredible resources, and it's just a beautiful country. I would love nothing more than to see socialism get purged, at least for a long period of time, and for a Bitcoin standard to get brought about. I think it would do just almost miraculous things for the country and for its people.
Yeah, I would also say cautiously optimistic. I think it's important to keep in mind with really any governments, and all governments are a little different, but governments themselves are typically not a monolith. So there's so many stakeholders within a government that have to be convinced before you're going to do something like make Bitcoin legal tender, aka what Bukele and El Salvador did. I think there's probably an analogy we could draw to what Saylor has done at MicroStrategy, because you could have made the same argument. Corporations, there's so many stakeholders, they have these processes, they're bureaucratic. Well, there's varying degrees of processes and bureaucratic nature at different companies. And now we've all learned that Saylor had a pretty unique setup where he had a good amount of control over that company. Did he have to convince a bunch of people to be on board with his plan? Yes, he did. But was it a lot easier for him to do that at MicroStrategy than it would be for whoever, for Google to make an investment of their corporate treasury in Bitcoin? Yeah, it was much easier for Saylor to do it. You could probably say the same thing about El Salvador. Yes, they're a nation state, but they probably had a smaller nation state, probably had an easier path to make it legal tender than a larger country. And I don't know enough about Argentina to say how difficult that path is. They certainly have one thing going for them, is that they have so many other things they've tried that have failed, that their country has been willing to vote in someone who's an outspoken libertarian, a narco-capitalist, wants to take a chainsaw to the central bank and whatever other government programs. So I guess when you've tried so many things and seen them fail, you're willing to try something else. But at the very least, I would say Argentina specifically, even if they don't make it legal tender, the fact that they just elected a president who is outspoken about central banking, he literally calls it a scam, outspoken about legal tender laws. I believe he has said some positive things about Bitcoin directly, that it's a response to the central banking scam, I believe is something that he said. Mm-hmm. At the very least, that should spur more awareness and potentially adoption in Argentina and other South American countries, even if they don't make it legal tender next month.
Yeah, I'm actually kind of bearish on Argentina itself making it legal tender, just because of their IMF debt. They're kind of beholden to their lenders. Argentina is the largest borrower from the IMF by far. I mean, it's like $44 billion, and they can withhold disbursements if they don't agree with the policy choices. And that would be catastrophic, given how much debt they have. And he's already meeting with the IMF, and the IMF, when they gave out their last disbursement, they had a provision in the clause to prevent Argentinian banks from allowing crypto to be serviced on the soil. So I think the IMF will kind of put their foot down. I think there'll be dollarization. The hope is, I think, that Milei would just not restrict Bitcoin adoption. That's what I think is more logical right now. I think maybe down the road it could happen. But I just think the IMF is kind of in control there, just because of how much debt they have. But Dr. Jeff, you brought up a great point with the Middle East, because I'm extremely bullish on Bitcoin mining in the Middle East. You have Oman and Bhutan and the UAE just partner with Marathon, where they're actually state-sponsored Bitcoin mining operations, or the Sovereign Wealth Fund in the UAE is the one that invested in the Marathon project in the UAE. And so it's extremely bullish, because they're not just interested in Bitcoin, but they're seeing Bitcoin mining as a way to stabilize their grid, harness stranded energy, incentivize other renewable energy projects. And they're seeing the benefits on the ground there. And of course, that leads to Bitcoin adoption. And so that's really exciting to me. I'm really bullish on the Middle East in general in terms of Bitcoin nation state adoption. I wanted to pivot the conversation a little bit to just, everyone wants to talk about the ETF. So why don't we just go down there a little bit? People think that this is kind of driving the price, excitement around the ETF. They think it's going to get approved in January. What do you guys think happens if it doesn't get approved in January? Because the whole market seems to be kind of pricing this in right now. And I'm a little bit worried about some kind of shock happening if they come up with another reason to deny them, or something, maybe they delay or something. What do you guys think would happen then? And what are the probabilities you think that will happen?
Sure, I'll just jump in quickly. I think initially it would be a negative shock. I think the price would get hit. Who knows how much, maybe 10, 20% or something. But I think at this point, it's my take that most of the market participants are in agreement that approval is inevitable. Even if it's not imminent, it's inevitable by the SEC. And so I think even if they had that initial shock, I think it would quickly kind of recover and people would be like, well, okay, so it's not now. And it would depend what the announcement is, right? I mean, the SEC could be like, hey, we need another month, or the deadline's been, moved to March or something like that. I could see that would be the most likely thing they do, is kick the can down a couple months down the road. If they were just like, we're laying the hammer down, Elizabeth Warren is correct, Jamie Dimon is right, there's no chance we're going to approve it for the rest of 2024, that would be a big hit for sure. I will say though, I think, there's been building excitement for that. I'm not convinced that's the reason why there's been such a strong bid under Bitcoin. I actually wonder if it's related to what you just alluded to earlier, Sam, is action in the Middle East. Like, is there a bid? Is there some sovereign wealth fund that's buying, a few $1 million of, or not a few million, like tens of million, and putting this large bid underneath the price? That's definitely possible, I think. And then just one final capstone on that. We're all focused, or I have been at least really focused on Central and South America, and that's awesome. And I really want to see adoption from them all across the board, and it will be very net good for them and their leaders in that. It's fun watching El Salvador, all that kind of stuff. But to your point, they are just deeply indebted to the IMF. They are in horrible financial condition, kind of across the board throughout Central and South America. They really need Bitcoin. The Middle East is a totally different story. They are not totally in debt. They're the people who are making loans out to people. They have money coming out their ears because of resources and their sovereign wealth funds. If they get into Bitcoin, they're going to be able to put billions and billions and billions of dollars into it quickly. And they don't have to pay off any debt to start building up their stack. So that's, to me, very exciting if you get them on board. And then one last point, and then I'll stop because I want to hear what John has to say. I keep going on these tangents. The sort of the unsaid part of getting the Middle East on board is the entire nation of Islam, which is a huge religion, and they basically all kind of move in one monolithic block as far as how they think about things like money and Bitcoin. It becomes generally accepted from the leadership on down that Bitcoin is appropriate for their laws and their lifestyles. You're almost instantly onboarding over 1 billion people into the Bitcoin network. It's almost as if the Pope were to say, you know what, I'm pro Bitcoin, let's go. You Catholics should be stacking sats. Suddenly there's 2 billion Catholics around the world that are stacking sats. That's no joke. Like, people, I think, underestimate the effects that would have. And so I'm not touting Islam, obviously, or anything like that. But if that were to be accepted, that would be just a massive boon to the Bitcoin network.
Yeah, and shout out to there's a piece Alan Farrington wrote in 2021 called "Bitcoin is Halal." I have not read that in a while, but shout out to that piece. I believe he made the case that it is it aligns with Islamic finance. So check that out if anyone wants to read that. Yeah, my thoughts on ETF. I think Dr. Jeff kind of nailed it. It would be negative. Depends what the announcement is. Is it just, hey, not going to happen in January, but it's likely to happen in March or September? Based on what I'm seeing, and this is just kind of me reading secondary sources in financial media, I don't feel like I have a great edge on the probabilities and what's going on inside the SEC. But it seems like very unlikely that they're going to come out with an announcement that says, oh, we found this new thing that delays it forever or indefinitely. That seems to be pretty unlikely. But even if it were to be delayed for, let's say it's delayed for another year or until September 2024, in my opinion, there's still a bunch of things that are positive catalysts for Bitcoin or things that would support Bitcoin's price. I'll just list off a few of them now. One is that the halving is set to happen in April 2024. I know that there are huge debates over how much the halving actually affects the price, but at least historically speaking, it has coincided with increases in Bitcoin's price. And at the very least, there seems to be some sort of psychological self-fulfilling prophecy type thing going on there. But I know there's a lot of debate on that topic. The Fed being done hiking rates, or we think that they're done hiking rates, like we talked about earlier in the show. I think that's supportive of Bitcoin and other financial assets. I think there's more awareness about the unsustainable path of the US federal deficit spending, kind of an emerging market type deficit spending and debt accumulation scenario that you were talking about, Sam. or how does Luke Groman call it? He's U.S. with Argentine characteristics, something like that.
Yeah.
That's another one. I think there's something to be said about the fact that significant selling pressure on Bitcoin has passed. And that came from two main places. One, it came from these platforms in 2022 that were collapsing left and right. We know what all them are: Voyager, Celsius, BlockFi, FTX, et cetera, et cetera. That caused tremendous selling pressure to Bitcoin. The price falling also caused selling pressure from Bitcoin miners. So when there's just a lot of entities out there that have to sell Bitcoin, it can be hard for enough buyers to come in and support the price. And I think that's one of the big things we saw that happened in 2022 that led to that persistent bear market. Also on the positive side, I just see tons of people and entities firsthand every week making allocations to Bitcoin. They're not all doing it by saying, hey, I think the ETF is going to get approved. Yes, that's one factor, but it's not the only factor. Hence me going through this list. I think you have to note that if we were to end the year now, and it's only a few weeks till the end of the year, if Bitcoin price stays about where it is now, I mean, even if it drops a lot, it's going to be the best performing macro asset for 7 out of the last 10 calendar years. And I think that just gets incrementally more difficult for financial advisors, RIAs, whoever out there, family offices, to just completely ignore this thing and say, oh, don't touch it, I don't have an opinion on it, et cetera, et cetera. It just gets more difficult when you look at the last 10 calendar years of performance. We talked about Argentina. That feels like more of kind of like a PS to me and not a huge factor, but it's worth noting it. And then lastly, sorry, it's a long list of positive factors for Bitcoin's price. But lastly, there's got to be something said for the technical innovations that are happening on top of Bitcoin. And I think there's a few different things to unpack there. Innovations in terms of just ease of use, whether it's hardware wallets, whether it's Lightning wallets, mobile wallets, that allow people to have a much more seamless experience when you're buying Bitcoin, taking it into self-custody, and then potentially using it as a medium of exchange. Anyone who's been in Bitcoin since 2017 can say the progress that's been made there is just absolutely massive. Companies have just made it so much easier to interact with and use Bitcoin. But then there's also even more technically impressive innovations on top of Bitcoin, like Miniscript, ARC, covenants potentially being introduced by soft forks and companies that are working on that, and products that can kind of be built around that. And why that's important, other than making Bitcoin more usable, which is critical, but I think there's another thing that is beneficial here, is that VC investor money might see this and say, oh, Bitcoin isn't boomer coin like they told me it was, and I should, I made this investment in OpenSea, an NFT platform, which is just insane to me that like VCs were running to invest in OpenSea, but they're like barely investing in Bitcoin. And I know, Sam, you're well aware of this, but some of the charts on like VC money that went into crypto in 2021 and early 2022 versus VC money that went into Bitcoin, crypto just absolutely dwarfed it. And I think with crypto blowing up so spectacularly in 2022, plus all these new innovations that are happening on top of Bitcoin and Bitcoin being shown to be much more stable, I think even the VC community is coming around to that. So that'll mean more dollars going into improving the Bitcoin experience, and maybe even those VCs adopting Bitcoin themselves as they see this all happening. So I know I just went through a ton there, but that's kind of my view, because answering the question of what happens if the ETF doesn't get approved, my sense is, yeah, it's a short-term negative, but there's still many, many things under the surface that make me positive for Bitcoin's price in the coming months and years.
Well, I'm bullish. I'm more bullish now after listening to that. I always love like the Bitcoin is halal, because like if for anyone who doesn't understand, like receiving or getting paid interest in the Islamic religion is like a bad sin, like a very bad sin. And so Bitcoin obviously doesn't, because it's not dead. So Bitcoin is halal money. I just think it's a fantastic idea. And then I wanted to ask like one question just to wrap up. You brought up a lot of reasons to be bullish heading into 2024. And maybe that's going to being part of your answer here, but I was wondering, this has been it's been a drawn out bear market, to be honest with you. There's been a lot of explosions left and right in the broader crypto industry, ton of news. It's been a very long bear market. What has kind of kept you guys going in terms of your conviction of Bitcoin? Like, why do you wake up every day and still work to push Bitcoin's adoption and teach people about it? So, Dr. Jeff.
Man, that's a pretty loaded question.
That is a loaded question.
I actually just tweeted yesterday that I'm actually almost bored talking about price action now. This is my third cycle. The first one, I was a degen crypto trader who, I got into Bitcoin in like 2015 when it was only a few $100s. Still remember when it reached $1,000 and how amazing that was. Still remember when it reached parity with an ounce of gold, and I couldn't even believe it. Like, that was just unbelievable that happened. So that's how early I was. And then how stupid I was that I back in when exchanges, you actually had to, if you wanted to buy crypto nonsense, you had to actually exchange your Bitcoin for it. You couldn't just, take dollars for it. You had to get onto exchanges, usually buy Bitcoin and then swap Bitcoin for whatever crypto. So I had this just stupid diversified portfolio of like 50 cryptos all around the ICO time, and I just thought I was brilliant because like you just like sneeze and the price is up 20% or 50% or 100%. Anyways, I think I've told my story before about how it skyrocketed. By the end of the cycle in 2017, early 2018, I made a bunch of money, but then it quickly dropped 95% or more across the board, and I was left with 0 Bitcoin. And then in April, I got hit with a tax bill that was like, knock your socks off, like earth-shattering tax bill, which was awesome. And I was like, what in the heck? So it took me. That was my school of stupid. So even though I say I was I'm from the class of 2015, I got held back all the way until 2019 until I finally understood Bitcoin in depth, and then just went pure Bitcoin after that and started teaching people about it. What gets me up in the morning is the fact that it truly is better money for a better world. Like, I think about this all the time and the implications, and how putting on my doctor hat for a bit, the fiat standard and the fiat currency lifestyle is so stressful. It's this hamster wheel that never stops, and it just spins over more and more and more and faster and faster and faster. And I see people, especially today with inflation being an issue over the last couple of years, where their single job doesn't pay the bills, and so now they're getting 2 jobs, and now you're in a family, a husband and wife, and between them they have 3 jobs or maybe 4 jobs, and they're doing Uber on the side to their day job, and they're trying to figure out how to make money selling Amazon products or whatever they're doing to try to support themselves and support their family. And it's this super stress, and then health problems set in. There's this condition called psychosomatic conditions, which is a kind of a real thing. It's sort of weird, but basically the more stress that is on you and on your mind, it actually can manifest itself through physical symptoms, through joint pains, through, it basically causes internal inflammation and can lead to all these other issues. It can increase your risk for heart attack, for strokes, for just lots of other things. Very fascinating. And I think it's basically a condition, at least in part, at least for some people, of just this fiat currency system. Why? Because your purchasing power is steadily decreasing year after year after year. And so even though you're working your butt off trying to save more than you spend, your costs of living are increasing, and your purchasing power, even though you're working your butt off, can actually decrease year after year. It's super stressful. That's the number one cause of divorce in marriages, right? Is financial issues, and just all these other issues that can happen. So why? So the coming full circle, Bitcoin is the exact opposite, right? Not only does it not erode your purchasing power over time, it preserves and actually appreciates your purchasing power over time, just sort of by its definition of scarcity. And because of that, you can just have a completely different lifestyle. You can quit focusing and stressing out about the short term, and you can start looking to the long term. You can start thinking about your kids. You can start thinking about your grandkids. You can start building projects that are not going to just fall apart tomorrow. They're going to last for decades and even for centuries. So I like to call this future period the age of legends. I think we're on the cusp of the age of legends, similar to sort of the Renaissance period, similar to Michelangelo and the Sistine Chapel and these sorts of things, that we're still appreciating these amazing works of art centuries and centuries later. I think we're heading into that period here, and that's what Bitcoin will enable. And I'm really excited for that. We're going through the hard time, right? I think we're sort of in the trenches right now in this battle where we have just ridiculous comments by Jamie Dimon and Elizabeth Warren. Literally the most powerful people on the planet are fighting against Bitcoin. They're going to lose, but it's going to be ugly, and it's going to have, there will be victims along the way. So we're in sort of the hard period, the messy period. What's coming after this, though, maybe 2030s, maybe 2040s, somewhere in there, and then beyond, I think is going to be a beautiful new world, honestly. And I hate to be like, too wishy-washy about it or whatever I am about it, but I'm really optimistic for what's coming. And it's hard to see when you're living day to day through it. But if we could just take a step back, I would love to be able to, time travel to the year 2050 and look and just see how the world is different, because I think it will be massively different. And I think a lot of that will be because of just the monetary standard of the world. I think we'll be on a Bitcoin standard by that point. And I think it will just improve humanity 10x, 100x. And anyways, that's what gets me up in the morning. That's why I talk about it. I'm not here to make the money anymore. I can make enough money as a doctor and live a really good life and support my family. I'm here to teach people and hopefully make this world a better place because of what Bitcoin offers.
John?
Love it, Dr. Jeff. That was awesome, man. Yeah. Obviously, I feel very similarly. I would say I'm one of these crazy people who believes that Bitcoin is not just going to improve our economic system of commerce and trade, but because money is this thing that coordinates all human activity, unless you're going to go live a hunter-gatherer lifestyle and not use money. If you're not going to do that, then money affects everything we do. So improving the money, fix the world, as Bitcoiners like to say. It's going to improve our systems of education, food, healthcare, science, art, architecture, energy. It's going to improve all of those things. And I have a quote that I just wanted to pull up here. So this is from Ferdinand Lips, not really a household name, but he wrote a book called The Gold Wars. And the quote goes, "Then protecting savings also had another meaning. Because there was no inflation in this golden world of security, people could live on their savings and concentrate on cultural activities. People are most likely to save when they are confident that they can enjoy the fruits of their labor. The monetary standard is closely linked to the moral standard, and as such determines the fate of humanity." So I'm a huge believer that is true. And that's why I'm so positive about the future. I think there is, to kind of piggyback on something Dr. Jeff was saying, there's something noteworthy about the fact that the Gilded Age, which was the late 1800s, Bitcoiners might be familiar with this period. It's obviously known as the Gilded Age. There's a lot of economic progress. There were a ton of innovations that kind of came from that time period that we still use today. The Gilded Age came during a period of sound money. It was pre the Fed. So, keep that in mind. We're still in the gold standard, didn't have central banking. It also came after the US Civil War. So, I am positive for what's to come. The flip side of that is, does it need to get worse before it gets better? Hopefully not. Maybe Bitcoin is this thing where you can kind of introduce this alternate system without the legacy system completely collapsing and having there be tons of conflict. So I definitely am positive for the future. And yeah, those are some of my thoughts on the better world that I think Bitcoin brings about. And it's just an endless rabbit hole. It's you look under the iceberg of Bitcoin, and it's monetary history, it's economics, it's computer science, cryptography, energy markets, game theory, geopolitics. I mean, you never get bored learning about Bitcoin. There's literally something fascinating and new that you can learn every single day.
Yeah, I love both your guys' answers, guys. I guess if I could summarize Dr. Jeff's, Bitcoin is the cure, and he's a doctor, so kind of knows what he's talking about.
Well said.
I gotta run. I gotta jump on a flight to Unconfiscatable. If any listeners are there, feel free to say hi if you see me. But thank you guys so much for joining the show. You can follow John at John at Swan on X, and Dr. Jeff at Balshire Cap. Both are excellent follows for more macro insights like you heard today. I just want to thank you guys so much for coming on the show and for being a part of the Bitcoin community. I learned so much for you guys like every day.
Thanks, Sam. Always love being on your show anytime.
Yeah, likewise, Sam. Love following your stuff, and you too, Dr. Jeff. Great chatting with you guys.
Thanks, John.
Have a great day, guys. All right. That was another excellent episode of Swan Signal Live. I love talking to those guys. I learned so much from them about macro. Thank you for listening. As always, check out pacificbitcoin.com for tickets to the Pacific Bitcoin Festival today. It's going to be an amazing time once again. Bigger, better, amazing guests, speakers, festivals, workshops, everything you want to do at a Bitcoin festival. It's important to meet in real life, shake some Bitcoiners' hands. It's always a fantastic time. And just like, comment, repost this episode if you found it helpful. If you let me know how it can improve, what guests you want to have on the show. Always listening to feedback from you guys, the listeners. Appreciate your support, and I'll see you next week.